Right. What we did in our essay 220. So there are two things that deals with quality. Essay 220 deals with quality of audit, but however, SQC1 is page number 10. However, SQC1 deals with quality of audit, review, assurance, as well as related services. So now in essay 220, who is responsible for the quality? The engagement partner is responsible. Is everyone aware who's engagement partner? For example, Ramesh Suresh's company. Ramesh was auditor of 5-star. Suresh was auditor of Oreo. So who is the engagement partner of Oreo? Suresh. Who's engagement partner of 5-star? Ramesh. So the audit quality of 5-star will be taken care of by Ramesh. Audit quality of Oreo will be taken care of by Suresh. So who is responsible? The engagement partner. Now, SA 220 is premised on the basis, it is modeled on the basis of SQC1. So it is going to be at par with what? SQC1. So if you recollect your previous lecture and everyone in your yesterday's lecture, I showed you the main content, 6 points of SQC1 as well as 220 are the same. Now, what is the objective? We want to ensure that we maintain the quality of the audit procedure. Now, when you go to a restaurant, how do you say the quality of food is good? When the taste is good, texture is good. When you say the quality of a shirt is good, when, for example, the material of the cloth is good, it does not fade out after a wash. But when do you say quality of audit is good? When the audit is performed in accordance with the professional standards, legal and regulatory requirement. Second, the report that is issued is appropriate in the circumstances. What do you mean by the report is appropriate? Based on the evidence that we have obtained. If there was anyone else who had also reported on the same, his report would have been the same. His opinion would have been the same. So a report should be appropriate. So two things we want to see. The audit complies with professional standard and legal and the regulatory requirement. Okay, now everyone has received the books. Make sure you start marking up. Okay, so it complies with the professional standard, legal and the regulatory requirement. Second, the report issued is what? Appropriate in the circumstances. Essay 220, they are saying it is model on the lines of SQC1. Now, to ensure quality, there are 6 points that they have given. Firstly, leadership responsibility. Who will take leadership of the quality of the audit? Engagement partner. Now, assume you are the engagement partner. What will you tell your core firm? What will you tell your team? How do we maintain the audit? How do we maintain the quality? Firstly, you will explain them the importance of quality. Okay, first you will explain them the importance. To explain the importance, you are going to explain them 4 points. Firstly, we need to perform our work in such a way that it complies with what? Professional standards and legal and regulatory requirements. Second, not just the professional standards. We need to do it in such a way that it complies with the firm's quality control policies and other procedures. Thirdly, we will have to issue the report that is appropriate in the circumstances. Fourth, if you think so, you have any concerns, if you think so the audit program is not made appropriately, there are any addition or deletions that are to be done into our procedures, we need to extend our NTE, you can raise the concern. Okay, you can raise the concern without the fear of reprisal. What do you mean by reprisal? We are not going to take any actions. There are not going to be any repercussions. Just because you pointed out mistake in the partner's audit program does not mean he's going to cancel your CA final leaves. You still get your CA final leaves. You are not going to take any action against you. So 4 things I'm informing my team. We need to comply with the professional standard, legal and regulatory requirement. We need to comply with the firm's quality control policies and procedures. Issue the report that is and the engagement team's ability to raise the concerns without the fear of reprisal. Second, my team has to comply with the ethical requirements. So again, who is going to be responsible? The engagement. Now, what are the ethical requirements? Let us quickly revise the ethical requirements. There are 5 ethical requirements: integrity, objectivity, professional competence and due care, confidentiality, and professional. So now the engagement partner is responsible. He has to identify whether there are any threats to independence. Let us revise what are the threats to independence: self-interest threat, self-review threat, advocacy threat, familiarity threat, intimidation threat. ठीक है, 2 मिनट रुक जाओ, लेट मी रिवाइज द होल थिंग, फिर मैं तुम्हें टाइम देता हूँ लिखने के लिए। ठीक है, सो फेमिलियरिटी थ्रेट, sorry, self-interest, self-review threat, advocacy threat, familiarity, and individuation. So now engagement partner is responsible to identify the threats to independence. If he identifies the threats to independence, he will either have to eliminate those threats or apply the safeguards. How do you eliminate? For example, if I have shares or my wife has shares in Nykaa, there will be a self-interest threat. How can we eliminate it? By selling the shares. For example, I have given a loan to Yash Raj Films. It will lead to again what? Self-interest. So in that case, what I will ask Yash Raj to do is repay my loan before I am being appointed as an auditor. But a lot of times eliminating threat is not possible. For example, the client whom I am auditing is my next door neighbor, whom I know since last 20 years. There is a familiarity threat. Can I eliminate it? Can I forget the client? Can I become Gajni here? No, it is not possible to eliminate. What I will do here is I will apply a safeguard. I will apply a safeguard. How can I apply a safeguard? For example, let us say there are two partners. If I am a partner, Hardeep is one of my partner. Since the client was my next door neighbor, now I will ask Hardeep to become the engagement partner. I will ask him to issue an audit report. Now he will issue a report which is not biased, okay? Because Hardeep does not know my neighbor, but there is a chance that I might try to influence Hardeep's decision because at the end he's my partner and the client is my neighbor. But Hardeep will not be influenced. He will say, "Sir, we cannot give a false opinion. Tomorrow, if we are caught, then we'll face a lot of action." So he may not change his opinion. So here, what we are trying to put is a safeguard. Yeah, what we are trying to put is a safeguard. Okay, so this concept was an inter-CA concept. So all we need to write here is we will try to eliminate it or apply a safeguard or reduce it to an acceptable level. If it is not possible to eliminate, it is not possible to apply a safeguard, then the auditor will withdraw unless it is prohibited by law. Okay, so you all already know the examples where it is prohibited by law. For example, in case of a listed entity, if they after 1 quarter, after you have already been done a review of how many quarters, 3 quarters, can you resign? No, you cannot withdraw. You need to give an audit report for the whole year. Next, acceptance and continuance. Whenever you are accepting or continuing, acceptance in case of a new audit, continuance is case of a recurring audit. What we need to consider is CSI. What is CSI? Firstly, before we accept the audit, we need to evaluate whether we are competent. Whether we are competent. So whether we are competent. Second, do we comply with the ethical requirements? Do we comply with the ethical requirements? Next, whether there are any significant matters that arose during the audit. Let us say that there was some restriction on scope of audit. We have doubts over the integrity of the management. So will we accept the audit? No. So firstly, what will we evaluate from C? Are we competent? Do we have the adequate skill and knowledge? For example, we are appointed to audit of Jio. So if we do not have adequate skill in context of the telecommunication company, will we accept it? No. If we think so, we cannot comply with the ethical requirements. I know my grandfather has shares of 1 crore rupees of MRF. He's not going to sell it. Will I be able to comply with the ethical requirements? No, I will not accept. There are significant matters. The previous auditor who resigned from the engagement, he has already informed me while I was obtaining an NOC from him, can I accept the audit? He told me that they had put restriction on scope. There is going to be a similar restriction on us also. Will I accept the audit? No. I doubt the integrity. For example, the principal owner is Vijay Mallya. Will I be willing to join that particular organization? No. So here, before I accept, I need to check CSI. What is C? Competence of the engagement. What is C2? Compliance with ethical requirement. S is significant matter. And I is integrity of the principal. So point number 1 was leadership. Point number 2 was ethical requirement. Point number 3 was acceptance and continuance. Next is assignment of the team. Now, for example, if you are taking interviews of your team members, what are the two main questions that you would want to see? What are the two main questions that you would want to ask in that interview? To maintain the quality, if you recollect, there were 4 points that we were considering. Firstly, that we should comply with the professional standard and legal and regulatory requirement. So whenever I'm selecting a team member, I will ensure that he is aware of what? Professional standards and legal and regulatory requirements. Second, firm's quality control policy. While I'm taking an interview, I would not want to ask this. Why? Every firm will have their own quality control policies. So not necessarily that you would know what are my quality control policies. I will have to teach you. This usually happens in the induction training program that you'll have, where they teach you what are the firm's quality control policies. Third, issuing the report that is appropriate. So yes, I would want to know whether he is in a position to issue the report that is appropriate. Raise the concerns without the fear of repression. This I would not want to ask in an interview because this is an environment that I create. For example, I ask you as a student that if you have any doubt, you can raise the concern, you can ask the doubt. I have to create that environment. I have to be friendly enough so that you can feel comfortable to raise those doubts. So you may not, while taking an interview, I cannot judge you based on this. So while taking an interview, I'm asking you only two questions. Whether you will be able to perform in accordance with professional standard and legal and regulatory requirement. Secondly, will you be able to issue report that is appropriate? So whenever we assign that assignment of the engagement team, it should be ensured the engagement partner, that the engagement team and auditors expert who are part of the team collectively have competence. So firstly, we should collectively have our competence. Because if we do not have competence, we have seen in the point above that we cannot accept the audit. So we should have competence. Secondly, engagement in accordance with professional standard, legal and regulatory requirement. Add one more point there, issue report that is appropriate in the circumstances. Okay. So just give me 2 minutes. Let me finish this point. फिर एक साथ सारी चीजें लिखो. Next, engagement performance. Whenever we start performing an engagement, we need to focus on DRSC. Yeah, we need to focus on DRSC. Okay. So what is DRS? Don't you need to system? What is DRS? D is direction, review, supervision, and C, wherever appropriate, we have to take consultations. So we have to take consultation. So engagement partner has the responsibility for direction, supervision, and performance of the engagement in accordance with professional standard and legal and regulatory requirements. He is responsible for report being appropriate. So he's also responsible for what? Report being appropriate in circumstance. Further, review of documentation before issue of this report is his responsibility. So he will have to review the documents. Because see, tomorrow, at the end, he is responsible for expressing an opinion. If anything goes wrong in the opinion, people will tell him that your opinion was inappropriate. He will have to use his documentation to defend himself that we had performed our work in accordance with the standards. So he will have to review the documentation. He has to ensure that PSI has been obtained to support the conclusion. Lastly, the partner is also responsible for ensuring appropriate consultation on difficult or contentious matter. What do you mean contentious matter? Where we have difference of opinions. So in all such cases, we may have to take outside consultation from experts. Lastly, we need to review this particular point is pending. Correct? So monitoring wala point we had done. Let us go through monitoring. An effective system of quality control includes monitoring designed to provide the firm with what? That the policies, procedure relating to the system quality are relevant, adequate, and operating. So we need to have monitoring. Now, to go through some detail, for monitoring, what we can do is we can have our own monitoring, but now there is something also called as peer review. There is also something called as quality review. Peer review, we can ourselves also do voluntary, but now in the recent amendments, ICAI has made it mandatory for a lot of practicing firms. So if you have partners, 4 or more than 4 partners, peer review become mandatory from 2026 onwards to all those firms. So more or less every firm is now covered for what? Peer review. Now a lot of firms can do peer review voluntarily also. But now you know there is something called as what? NFRA. NAFRA. NAFRA is an institute made up by central government to monitor the proficiency of chartered accountancy. They can also conduct a review. They can also monitor the work what we are doing. That is called as what? Quality review. That is called as what? Quality review. So monitoring here what we are doing is internal monitoring. Here what we are doing is internal monitoring. We can also call some other firms who will do peer review. And if NAFRA appoints someone, it will be called as what? Quality review. So an effective system of quality control includes monitoring process designed to provide firm with reasonable assurance that the policies and the procedures relating to the system quality control are relevant, adequate, and operating effectively. The engagement partner shall consider the results of firm's monitoring process as evidence in the latest information circulated by the firm and, if applicable, other network firms when deficiencies noted in that information met the audit engagement. So everyone is aware what are the network firms. Let us say if you have common partners or you are working under the same brand name, let us say EY is a brand name, all the firms are registered under them. So this is what monitoring. Okay, so this is what we had done so far in essay 220. 7 मिनट लेट है 7:20 का भी 7:27 हो गया आज तेरा ठीक है चलो सारी चीजें क्विकली लिख लो सो वी कैन मूव इट ये मार्किंग्स हो गए थे ये वाला टॉपिक लिख रहे थे ना तुम लिया कि नहीं लिया तुमने लेके नहीं आया लेके नहीं आया थोड़ा वो सब कट करके पेजेस डालना तुम्हें तो दिए हर ऐसे के बार हमें टॉपिक के बाद तीन चार को दिए ओ गॉड चलेंगे when would be getting volume 2 सब books available है भाई all three volumes are given together हाँ पहले से बंद हुआ था तो वो शायद कुछ हुआ रहेगा all the three volumes are available we can go to the branch contact the branch but all the three volumes are available यार फिलहाल you will have to carry only and only volume 1 in case कभी if they put 6 hours का lecture तब हम शायद मैं तुमको दोनों वॉल्यूम मंगाऊंगा बस एक ही स्टैंडर्ड करते करते तुम थक जाओगे मर जाओगे तो हम उसके साथ कोई छोटे छोटे टॉपिक्स कर लेंगे और इस कैरी ओनली वॉल्यूम 2 सॉरी वॉल्यूम 1 बढ़े आगे? ठीक है. Sure. So next, moving ahead with the engagement quality control review. So for audit of which entities as of now, this is applicable only to audit of which one? Huh? No, मेरे हाथ में नहीं है. I don't know कौन किधर से कैसे क्या है. चल, next moving ahead with the engagement quality control review. अब engagement quality control review is for now applicable in case of which entities? Listed entities. So if we are auditing the financial statement of listed entities, yeah, we are auditing the financial statement of listed entities. And other than the audit engagement, if any, the firm has determined that the engagement quality control review is required. So firstly, they said it is applicable in case of listed entity or those other engagement for which firm has determined engagement quality control is required. So that is, we have determined this voluntarily that we want to do a quality. So who will decide? Will the client decide or the CA firm will decide? The CA firm. See, this is about quality of a CA firm. The client has no say in this. So if I'm auditing the financial statement of a listed entity, we will have to conduct a review. In case if I'm not auditing the financial statement of a listed entity and I voluntarily decide that we want to conduct a review, we will conduct a review. So engagement partner shall determine. You will have to determine three things. Firstly, that the engagement quality control reviewer has been appointed. Who has been appointed? Engagement quality control reviewer. Now this reviewer can be anyone. He can be anyone from our team. He can be my partner also. He can be my employee also. He can be anyone. See, this is an internal review. This is not going to anyone else. But he has to ensure, engagement partner has to ensure who is appointed? Engagement quality control reviewer. So here he has to make sure that reviewer has been appointed. Now, whatever the significant matters arising during the audit engagement, we will discuss those significant matters with the engagement quality control reviewer. What are the significant matters? So, for example, if you recollect key audit matter are those matters that are most significant, that are what? Most significant in the audit of financial statement. So, whatever the matters were most significant, we will discuss with them. For example, if you recollect, in case of DMart, inventory was one of the key audit matter. Because in 2020, during 31st of March 2020, physical verification was not possible. They had to take a judgment with what would be the amount of shrinkages, how many goods would have been, in a perishable state. So here we need to discuss the significant matters. Okay, we need to discuss the significant matters. So here we will discuss significant matters. Unless and until the review is completed, we cannot give our audit report. So what will happen here is, for example, 31st of March 24, we made our financial statement. For example, let us say 20th of August 24, we made our audit report. Once we have made the audit report, then the reviewer will conduct a review, because he will obviously have to see what is the opinion that you have given, what are the conclusions that you have drawn. Review report was given, for example, on 28th of August. Now we will date this report. So the date of the audit report that we are issuing cannot be earlier than 28th of August. So though we made the report, the audit report was made on 20th of August, but the date that we write in our audit report will not be earlier than 28th of August. Has everyone understood? Firstly, financial statements were made. We made our audit report, but we have not dated the audit report. We just gave this audit report and the financial statement to the reviewer. Reviewer conducted his review. He gave a review report. Yeah, he gave a, when did he give a review report? 28th of August. Now, the auditor's report will be dated after 28th of August. So, the audit report date can be after review report. So, not date the auditor's report until completion of the engagement quality control review. So, unless the review is complete, we cannot give a report. So 3 points the reviewer, the 3 points engagement partner has to make sure. He makes sure the reviewer is appointed. Second, he discusses the significant matter that arise during the audit. And thirdly, he will not date the report unless what is completed. Now, the engagement quality control reviewer should perform objective evaluation. What do you mean by objective evaluation? Unbiased. See, at the end, the reviewer is going to be an internal team member, right? He's going to be a partner, he's going to be an employee. But still, he has to make a objective evaluation, or else there will be no point of doing this review. So, objective evaluation of what? Significant judgments made by the engagement team and the conclusions reached. So, when do we have to take the judgments? Whenever management will take a judgment. So, for example, if estimates are involved, what are involved? Estimates. For example, again, let us take an example of a DMart. 31st March, we could not do physical verification. We went in the month of May. In the month of May, the stock line there was 2000 crores, out of which we could identify 20 crores of stock were perishable. For example, the expiry date was there, the bread had the expiry date, butter, cheese, and everything had the expiry date. Now they had to take an estimate. Management had to take an estimate on 31st March. What would be the amount of shrinkages? How many goods would have achieved their expiry date on 31st of March? So who took an estimate? Management. Now, management took an estimate, hence management had to take a judgment. Yeah, management had to take a. Now we have to take a judgment whether the management's judgments are appropriate or not. So here, who will take a judgment? Auditor judgment. After this, what is the conclusion that we have reached? After this, what is the conclusion we have reached? So here, the engagement quality control reviewer shall perform objective evaluation. What is objective? Unbiased of what? Significant judgments made by engagement team and the conclusion reached. What can be another example of the significant judgment made? What will be ROMMS? ROMMS is judgment of the auditor. This is a significant judgment. Because based on ROMMS, what are we going to decide? NTE of further audit procedure. So he will evaluate the significant judgments made by the engagement team and the conclusion reached. Now, this evaluation will involve how will he evaluate? He will do 4 things. He will discuss significant matters with the engagement partner. So here, in the above point, we had discussed engagement partner will discuss what? Significant matter. Likewise, they will put a responsibility on the reviewer that you also discuss significant matters with whom? The engagement partner. So both of them are going to discuss what? Significant matters. Review the financial statement and the proposed audit report. So you see which are the financial statement and you see the proposed audit report. Why are we using the terminology proposed audit report? Because we have still not dated the audit report. This is the proposed report. If the reviewer will suggest any changes or modification, we will do those modification and report, and finally after that we will date. Hence, the terminology used here is proposed audit. Review the selected documentation relating to the significant judgments the engagement team made and the conclusion reached. And lastly, evaluation of the conclusion reached in formulating the auditor's report and whether the auditor's report is appropriate. So, what is he evaluating? Four things. First, we will discuss the significant matters with the second. We will review what financial statement and the proposed. Third, we will review the selected audit documentation related to the significant judgments. And lastly, we will evaluate the conclusions reached and whether the proposed audit is okay. So ये हमारा क्या हो गया? Engagement quality control review. Now, for the audits of financial statement of which entities? The engagement quality control reviewer, on performing the engagement quality control review, shall also consider. So what he will consider, evaluate engagement team's evaluation of firm's independence in relation to others. So whenever you are doing an audit, we have to give a declaration of independence that not only the engagement partner, but the whole team is independent. In performance of audit, we read today that wherever needed, we need to obtain consultations. Whichever matters are difficult or contentious, where there are differences of opinion, the engagement partner need to take what? Consultation. So whether appropriate consultations had taken place on matters have involving difference of opinion or other difficult or contentious matters. We will also see the audit documentation selected for review reflects the work performed in relation to the judgment. So he wants to see whether the work was performed based on which the conclusion has been drawn. So three things we will have to evaluate: firm's independence, consultations were taken, and documentation reflect the work performed. So technically, how many points he is taking? 7 points. First, what did he discuss? Significant matters with the engagement partner, the review of the and the proposed auditor's report. What did he review? Selected and evaluation of the conclusion reached. In case of listed entities, or what also you have to see the firm's independence, whether the consultations have taken place, documentation of selected review reflects work performed in relation to the significant. Now, there can be a case where there is a difference of opinion. When there is a difference of opinion between the engagement partner and the engagement quality control review. Now, reviewer is an outside person or a lot of an internal person himself, internal. There might be difference of opinion. So, for example, the LT that the engagement partner has decided and LT as per the reviewer might be different. Or they might have difference of opinion on any judgment that they have taken. How to resolve this judgment? ICAI said this is an internal matter. And this is a you are appointing a reviewer from your firm itself. You only decide how are you going to resolve these matters. Now you only decide how are you going to. So you should develop a policy. Now you should develop a policy. So you have firms quality control policies. In that you should develop a policy. If there is a difference of opinion between the engagement partner and the reviewer, how are you going to resolve this particular difference? So we are not going to interfere. ICAI said since the matter is internal, we will not interfere. If the matter comes to our attention, then we will do something, or else we are not going to interfere. So if difference of opinion arise between the engagement team with those consulted and where applicable between engagement partner and the engagement quality control reviewer, the engagement team shall follow the firm's policies and procedures for resolving the difference of. So if there is a difference of opinion, we will follow the firm's quality control policies. So this was EQCR, that is Engagement Quality Control Review. A lot of time they use this short form EQCR in examination. So this is not as such a valid short form, but in exams they have stated a lot of time EQCR. Okay, so what is EQCR? Engagement Quality Control Review. So for now, it is mandatory only and only to listed entities and those other audit engagement, if any, for which the firm has determined that an engagement quality control review is determined that the engagement quality control reviewer has been appointed significant matters arising during the audit and not get the report until the completion of the engagement quality control. Next, the engagement quality control reviewer should perform what? Objective evaluation. What is objective evaluation? Unbiased evaluation of the significant judgments and the conclusion reached. What will the engagement partner do? Sorry, reviewer do? Four things. Discuss the significant matters. Review the third. Review the selected documentation. Fourth, evaluation of the conclusion. In case of listed entity, he will also see the forms, dependents, consultations have taken place, and a documented selected review is the work performed by performed and the significant judgments made and the conclusion reached. If there is a difference of opinion between the engagement partner and the reviewer, they will have to follow the firm's policies and resolve the differences. Okay, so this is SA 202. Okay, so what points will be covered so far in SA 220? We covered leadership, relevant ethical requirements, acceptance and continuance, assignment of the team, engagement performance, and monitoring. Plus, what we did is EQCR. What is EQCR? Engagement quality control. Now, we also need to document that everything that we have done so far. The engagement partner shall document following matters. So, issues identified in compliance with the relevant ethical requirements. So, now we are going to write all those points. Because, so for example, there were 6 points leadership. For leadership, we need not document anything. What was the second point? Ethical requirements. So, while verifying whether we comply with the ethical requirements, if there were any issues, for example, if either of the ethical requirements were not complied or we have to take some action, we will have to document the same. So, document the issues identified in respect of compliance with the ethical requirement. Conclusions on compliance with the independence. See, independence is also one of the ethical requirements. Okay, independence is also one of the ethical requirements. So, conclusion on compliance with independence that apply to the engagement and relevant discussions with the firm that support these conclusions. Next, we had also decided whether we will accept or continue. For acceptance and continuance, what did we discuss was CSI. What was CSI? Are we completed? Comply with the ethical requirement, but it's significant matter and integrity. So we need to document conclusions reached in regards to acceptance and continuance. Next, we need to document the nature, scope, and conclusion resulting from the consultations. So if we have taken any consultation, what was the nature and scope of the consultation, and what was the conclusion that we reached after those consultations? So there are 4 things that we need to document. Firstly, issues identified in respect of the compliance with the ethical requirement, conclusion in compliance with the dependence, conclusions reached regarding the acceptance and continuance, nature, scope of the conclusion resulting from the consultation. Worst case, if you cannot recollect what to write in documentation, I'm giving you a simple trick for every standard. Whatever you have done in the standard, you can write a. For example, in this standard, we studied 6 points, leadership. So for leadership, we need not document anything. Second point was about ethical requirement. You can write ethical requirement. Third point was about acceptance. Can we write about acceptance? Fourth point was about assignment of the engagement team. You can write those points also. You can have a conclusion reached in regards to the assignment of the engagement team. Then we had written in context of direction, review, supervision, consultation. So here they have written only consultation. But I can write, documentation in context of the direction, review, and supervision, right? And monitoring. So we can write the documentation in regards to monitoring as well. So if you cannot recollect anything in context of documentation, you write everything that you have done in that particular. Why I'm telling you so? In our whole syllabus, you will have 2 points which are very repetitive. One is documentation. In every standard, you will have documentation. What do we need to document? And there are a few times when ICAI has specifically asked what will you document for this standard. So if you cannot recollect, write what you have done in the standard. Second repetitive point will be the report. So now, as and when we move forward, you will understand how do we get audit. But now you know there are additions in the syllabus. Now we have something called as related service. There are 2 standards of related service given here, 2 reports. Then review of the financial information. Again, there are 2 standards given here, so another 2 reports. reports. So how many reports? 7 reports. One report of audit. So how many reports so far? 8 reports. They have also given a report of when we do investigation, 9 reports. When we do due diligence, 10 reports. Forensic audit, 11th report. Internal audit, 12th report. So there are more than 12 reports given in your syllabus. At the end, what we will try to do is we will summarize everything on one page. So you understand what are the different points that you are supposed to give in report. But that can we can do it only in case of reporting. Documentation, the every standard has it. We cannot summarize almost 30 standards and write what we need to document it here. So if you cannot recollect what to write in documentation, what is the simple trick? Write whatever you have done in that particular. So with this, we are finally done with what essay 220. If you have understood 220, SQC will flow on the same lines. It is just that little bit, content here and there they have added, but the concept remains the same. So let us move ahead with what? Meeting. Just have to add a small note here. जैसे करना है तो बना चालू है अगर बंद करना है अभी चालू होगा ठीक Now, what is the difference between SQC1 and SA220 applicable to audit? It is applicable to review, assurance, as well as related services. However, SA 220 is applicable to audit only. Okay, so SA 220 will not apply to review, assurance, or related services. Applicable to entire firm. So for example, in my firm, I have multiple teams. One team is doing audit, one team is performing review services, one team is doing giving consultancy service, one team is doing assurance service. SQC is applicable to the entire firm. However, SA 220 is applicable only to audit engagement team. That is applicable only and only to what? Audit engagement team. However, the common point between both of them that both focus on what? Quality control. They both focus on what? Quality controls. This also focuses on quality control. This also focuses on what? Quality control. So this is the basic difference between what? SA 220 and SQC1. So if you have a stick note or anything, तो यहीं पे starting में where we have quality control है वहीं पे सिर्फ add this particular stick note. Done. Yes. Third point is not a difference. So now quality, what do you mean by quality? The procedures required by the firm's policies on engagement quality control review has been performed. The engagement quality control review has been completed on or before the date of auditor's report. So unless the quality control review has not been completed, can we give the audit report? No. The reviewer is not aware of any unresolved matters that would cause the reviewer to believe that the significant judgment by the engagement team made and the conclusions reached were not. So here, three things that you will have to focus for sure. Firstly, the procedures are complying with the work firm's quality control policies. Second, the review has been completed. Unless the review has not been completed, the report cannot be provided. Lastly, the reviewer is not aware of any unresolved matters that would cause the reviewer to believe that the judgments made by the engagement team are not appropriate. So if the reviewer thinks that the judgment made by the reviewer is not appropriate, they will have to resolve the difference of opinion between the engagement partner and the reviewer and come to a common conclusion. Now, SQC1, quality controls for firm that performs audit, reviews of historical financial statement, other assurance and related services. So SQC1 applies to everything. What are the six elements here? Leadership responsibility. So in SA 220 also we have leadership responsibility. Who are leadership responsibility? Engagement partner. Ethical requirements, again the ethical requirements are going to be same. For acceptance and continuous resource, we need to comply with CSI. Human resource is nothing but the engagement team. Engagement performance, we saw DRSC. What was DRSC? Direction, review, supervision, and consultation. And the last one was monitoring. So again, the elements are quite same. It is just few points here and there they have added. SQC1 requires the firm to establish policies and procedures designed to promote the internal culture based on the recognition that the quality is essential in performing the engagement. So see, though we are going through, you need not memorize SQCR. You are going to memorize what 220 and based on 220 only you will write the answer of SQC. We are just reading through everything so you understand, okay, everything is at par. Few points which are there that we will memorize or will not memorize the whole answer. Such policies and procedures require the firm's chief executive or the firm's managing partner to element the system of quality control to assume the ultimate responsibility of the firm's quality. It has been laid down clearly that the firm's strategy is subject to overriding requirement of the firm to achieve the quality in all engagements that the firm performs. Essentially, it implies that audit quality of paramount in all engagement. It is non-negotiable. So what they are trying to say is that quality is non-negotiable. Now, in this regard, what is to be ensured? The firm assigns management responsibility so that commercial considerations do not override the quality of the work performed. So we assign the team in such a way that commercial consideration, what do you mean by commercial consideration? What you are being paid will not override the quality of work performed. So just because you are underpaid, just you are an article assistant does not mean you will not take the efforts. You will have to comply with the quality. Firms policies and procedures addressing the performance evaluation, compensation, and promotion. So here we are focusing on what? Performance evaluation, compensation, and a promotion. So these are nothing but incentive with regard to the person are designed to demonstrate firm's overriding commitment to quality. Next, the firm devotes sufficient resources for the development, documentation, and support of the quality control. So here, in their leadership, what did we discuss? That we need to comply with what? Professional standard and legal and regulatory requirement. We need to comply with the firm's quality control policies. Thirdly, we said we need to raise the concerns without the fear of reprisal and issue the report that is appropriate. Here, what are the 3 points that they are saying? Management responsibility so that commercial considerations do not override quality. Second, what we are going to focus here in is on performance evaluation, compensation, and promotion. Why are we focusing on this? Because see, if the performance evaluation is done regularly, obviously it will impact the quality. If the compensations are not paid well, then obviously it will impact the quality. If the promotions are not given, it will not give any incentive to anyone. If they are not incentivized, again, it will affect the quality. Lastly, the firm devotes resources to development. So there should be appropriate trainings going on. So the resources are developed. It should have resources for what? Documentation. Because documentation is only source by which we can judge whether the quality is maintained or not. So this was leadership of for the quality within the firm. Next, ethical requirement. What are the ethical requirement? What are the 5 ethical requirement? Integrity, objectivity, professional competence and due care, then confidentiality and professional behavior. The firm should establish policies and procedures designed to provide it with reasonable assurance that the firm and the personnel comply with the ethical requirement contained in the Code of Ethics issued by the ICAI. What are those fundamental principles? Integrity, objectivity, professional competence and due care, confidentiality, and professional behavior. Now, fundamental principles should be emphasized by actions of the leadership. So he himself should comply with this fundamental principles. In case if the leader himself is not complying with the fundamental principle, the team is not going to. So somewhere the actions of the leadership, the leader will have to take an action. Spreading awareness and the training, if there is continuous training, then in that case, they can maintain the professional competency. So if we have to be professional competence, the ICA says you need to attain the knowledge and you need to maintain the knowledge. So you need to attain the knowledge and maintain the knowledge. Only then you are professionally competent. So for that, what we require is what? Training. Because if you want to make sure a team maintains the knowledge, there has to be adequate training. Then there has to be monitoring and process for dealing with non-compliances. So we should have internal policies. If there are non-compliances, then how are we going to deal with this non-compliances? If the non-compliances are caught by ICI, then they will take action as per the disciplinary board of committee, what ICI does under professional ethics. But in case if we come across non-compliances, what is the process of dealing with non-compliance? Observation of independence in all engagement is a founding requirement. However, there are few engagements where independence is not required. For example, if we are providing related services, for example, let us say I'm just filing a tax return for you, or let us say I'm just compiling your books of accounts. Do I need to be independent? So there are certain engagements where independence is not a requirement. But however, whenever we are giving the assurance, independence is a requirement. So write a note here. assurance is like where we are giving opinion. Because assurance does not mean that for audit and review we will not be independent. Whenever we use the term assurance engagement means where we are giving opinion. So wherever we are expressing an opinion, we have to be independent. Where we are not expressing an opinion, we will not be independent. So here, firstly, we said the firm should establish policies and procedures that will comply with the ethical requirement. What are the five ethical requirements? Integrity, objectivity, professional competence, and lastly, professional behavior. Fundamental principles should emphasize on what five things? Firstly, actions of the leadership, spreading the awareness, monitoring, and a process of dealing with non-compliance. Observation of independence is a requirement of all engagement. However, where we are not expressing an opinion, assurance is not a, independence is not a requirement. Now, every firm should develop policies to maintain independence. So to maintain what? Independence. The firm should establish policies and procedures designed to provide reasonable assurance that the firm, its personnel, and including the experts and the network firm, maintain independence required by the code. Okay, so we need to develop policies via which the whole team is what independent. For this, we need to communicate its independence requirement to the requirement to its personnel. So I need to inform my team that these are the independence requirements. I, as an engagement partner, should identify and evaluate whether there are any circumstances that create threats to independence. What were the five threats to independence? Self-interest, self-review, advocacy, familiarity, and so now I need to identify and evaluate circumstances and relationship. I need to evaluate what? Circumstances. First, for example, I know either of my team member holds an equity share in the company that we are auditing. Or let us say, for example, one of my team member has taken a loan from Axis Bank. If we are going to do audit of Axis Bank, it will affect what? Independence. Why will it create a threat to independence? Axis Bank can tell that particular team member, I will waive off your loan. For example, let us say Radha, right? So, for example, let us say Radha has taken a loan of 1 crore from Axis Bank. Now, Axis Bank can tell Radha to we will waive off your loan of 1 crore. You make sure you give a report where everything is stated as 12. So, somewhere this is a circumstance, and this is a circumstance that which is creating a threat. But however, there will be few relationships. For example, let us say one of my team member, for example, let us say Pankaj has a close business relationship with the client. He has a close business relationship. So in that case, I know his decision might be influenced. Or let us say he himself has an interest in particular entity. Let us say he is a 51% partner in that particular entity. Then his decision will be influenced. So I need to identify circumstances. I need to identify relationships that create what? Threats to independence. But if there are threats to independence, I will have to take actions to eliminate those threats. But we already discussed in 220, it is not always possible to eliminate it. Hence, we will try to apply safeguard and reduce them to an acceptable level. However, if reducing the threats is not possible, I will have to withdraw wherever withdrawal is not wherever the withdrawal is not prohibited under the law and regulation. So once again, I will communicate what are the independence required to my whole team. Identify circumstances and relationship that create threats to independence. So I will have to identify what circumstances and then have it identify what circumstances and relationship that create what threats to independence. I will try to reduce them to an acceptable level. Which level? Acceptable level. Okay, to eliminate or get it at an acceptable level. However, if it's not possible, I will withdraw from the engagement. All the breaches of independence should be promptly notified to the firm for appropriate action. So wherever there is a breach, we should promptly inform it to our team. We should promptly inform it to the firm so the actions can be taken. At least annually, the firm should obtain a written confirmation of compliance with the policies and procedure on independence from all personnel required to be independent in terms of requirement of the code. So at least annually, I will obtain a letter of independence that the whole team is independent. So once again, so far what we studied, the firm should have what policies and procedures that will comply with the ethical requirement. 5 ethical requirements were integrity, objectivity, professional competence, professional behavior, confidentiality. Fundamental principles that should be emphasized is actions of the leader. Second, he should spread the awareness on the trainings, monitoring, and process for dealing with non-compliance. Also, of independence is required for engagement. However, if there are non-assurance engagement where we do not express an opinion, independence is not a requirement. We should have policies and procedures designed to make sure that we maintain independence. For this, we need to do two things. Firstly, we need to communicate the independence requirement. I need to identify circumstances and relationships that create what threats to independence. Try to eliminate those threats. Ya to apply safeguards to bring it to an acceptable level, or we should withdraw from the engagement. All breaches of independence should be to the firm for appropriate action. It is objective to ensure that the independence requirements are at least annually the firm should obtain what with its policies and procedure on independence from all personnel required to be. Lastly, SQC1, this special emphasis on which threat using the same senior personnel on assurance engagement over a prolonged period may impair the quality of the performance. So what they are trying to say, if there is a long association, for example, the same senior person has been, conducting this audit since last 5 years, 7 years, then there will be some kind of familiarity there. Therefore, the firm should establish a criteria for determining the need for safeguards to address this threat. How can you have this? How can you do this? How can you address this particular threat? By internal rotation. Now, how can you address this threat by? So there is something called as external rotation. There is something called as internal rotation. External rotation under 139, do you know if you are a partnership firm, you get 2 consecutive 10 years or 5 years? Other than partnership firm, 1 consecutive. But let us say if you are a partnership firm, you get 2 consecutive 10 years of how many years? 5 years. So eventually 10 years. Your same senior person, your same senior partner is there for how many years? 10 years. It will lead to what? Familiarity, right? Hence, what you should do is after every 5 years, have an internal rotation. They have an internal rotation. So this can be an example of a criteria to establish to reduce the threat. In determining appropriate criteria, the firm considers such matter as nature of the engagement, including the extent to which involves a matter of. Now, why are we considering this? For example, we are appointed as an auditor of a private company. As an auditor of a so external rotation also applies to a lot of private companies. If their financial capital or borrowings is more than 50 crores, it will apply to them as well. So if it is applicable to them, but there is no public interest involved. Okay, in case of private companies, public interest involved that no. So even if there is some familiarity there, we need not follow internal rotation. But however, it is a public company, there is public interest involved, then I will try to have an internal rotation. Next is the length of service or length of service of the senior personnel on the engagement. So since how many years we can be on this particular engagement? So I can define, for example, 3 years or 5 years. So I will have to put a restriction to a senior person can be in for that particular engagement for how many years. So 2 things I consider. Whether public interest is involved. If it is a closely held private company, then I do not really have any problems. But however, if it is not a closely held private companies, I will have to focus on rotation. So this was the ethical requirements. So one point what we did was leadership. Leadership may we need to focus on 3 points. That the commercial considerations do not override the quality. Next, there is performance evaluation. We give compensation as well as promotion. So there is enough incentives. We have resources for the development and for documentation. And then what we did was ethical requirements. Third point is acceptance and continuance. For acceptance and continuance, what do we consider? CSR. What is CSR? Are we completed? Do we comply with the ethical requirement? What are the significant matters arising during the audit or the integrated? So a firm before accepting should acquire vital information about the client. Such information would help the decide integrity of the client and the key managerial person, competence. to perform the engagement, do we have the adequate capability, time, as well as resources? So a lot of times we may have the capability, but we also need to see, do we have the adequate time and the resources to perform this particular engagement? Do we comply with the ethical requirements? With regard to the integrity, matters that the firm considers include, for example, the identity and the business reputation. Okay, we need to consider what? Identity and the of the client's principal owners, key management, related parties, and those shall with governance. Okay, so how do we understand the integrity of the principal owners? The nature of the client's operation, including the business practices. So, for example, a lot of times Tatas usually have a very good name because they seem to have a lot of integrity and everything. But a lot of times, if you consider a client, for example, these days when we talk about Patanjali, so a lot of times Patanjali is known to not have integrity, have a lot of fake advertisement. We have seen a lot of times Supreme Court, High Court giving judgments that they're doing false advertisement. So now, if you have doubts over the integrity of the principal owners, if you have doubt over the business practices, for example, Patanjali with a lot of Ayurvedic things are making very tall claims that this will cure this particular disease, this will cure this particular disease. However, it is not doing anything as such. So now, the business practices used by them, you have a doubt over the business practices itself. Then will you be willing to be an auditor of that particular company? So we need to consider the business practices with the help of which you know the integrity of the information concerning the attitude of the client's principal owners, key management, and those shared with governance, with matters such as aggressive interpretation of the accounting standard and the internal control. So, for example, Byju's, Zomato, both these companies, they started changing their accounting policies as and when they started becoming a listed entity. So they changed their accounting policies just to make sure that the financial statement appear much better as compared to what they used to earlier. So now, what is the attitude of the principal owners? What are the accounting standards? What are the interpretations they are doing? What is the internal control environment that they are setting up? So now, when we talk about the internal control environment, the when we talk about the internal control environment, this is one component of internal control. That is its one component. What do you mean by control environment? Management's value, their ethical behavior. So, for example, management themselves is saying you do whatever you wish to do. We just want profit margins. We just want to make sure that we capitalize on the market. Or let us say management themselves is not ethical. Management themselves are promoting their sales managers that even if you have to bribe someone, even if you have to make false promises, you go ahead and do that. So here the control environment itself is effective. The control environment itself is effective. Other components of the internal control are not going to function. So we need to understand what is their attitude towards the accounting standards and their attitude towards what control environment. So firstly, we saw what are the business practices. Then we saw what are the attitude of the principal owners towards what accounting standards and the control environment. Whether the client is aggressively concerned maintaining the firm's fees low as possible. So in case of, for example, Byju's, if you know Byju's, initially the auditors were Deloitte, but when the Deloitte resigned, BDO was appointed as the auditors. But somewhere the biggest concern between Deloitte and Byju's was the audit fees charged by Deloitte. Because initially, the revenue recognition was something else. Deloitte said you need to change your revenue recognition or else we'll have to modify the opinion. Since Byju's was under the process of getting listed, they had to change their whole revenue recognition. Now, Deloitte said we had to perform 3,500 extra man hours per job. For this extra 3,500 man hours per job, they quoted a fees which was almost 3 times to the fees what they charged in the previous year. So this was the main friction point between Byju's and Deloitte, that the fees that they are quoting is very high. They wanted to ensure that the fees that they are charging remains at low. So somewhere this again creates a doubt over the integrity of the principal owner, that if we are performing extra work, if something is very justified and still you want to make sure that you do not do this, then you may as an auditor may not want to accept that particular work. Indications that there are inappropriate limitation on scope of the work. So whenever you are appointed as an auditor of a company, if you recollect professional ethics, we will going to first communicate with the predecessor auditor in writing. The predecessor auditor himself has informed you that there is a limitation on scope. They are not allowing me to do particular work. They are not giving me access. They are not giving me access to the IT system that is required. So, for example, we already know there is going to be some limitation in scope. And if that is going to be inappropriate, if it is going to lead into a disclaimer of opinion, will I accept this particular audit? No. This will again create doubt over the integrity of the owners. Indication that the client might be involved in money laundering or other criminal activities, then again, this will create a doubt over the integrity. Reasons for the proposed appointment of the firm and a non-reappointment of the previous firm. The extent of the knowledge of the firm will have regarding the integrity of the client will generally grow within the context of ongoing relation. So whether the client has integrity or not, with our knowledge will grow as and when we start performing the audit. But however, we have to consider what is the proposed reason for our appointment and why are they not reappointing the earlier firm. Because of that also we'll come to know whether the owners has the integrity or not. So this whole point was focusing on what? Point number I, that is integrity. Okay, so before accepting, what we need to evaluate is CSI. What is CSI? Competence, okay, compliance with ethical requirements, integrity. So this whole point was focusing on what? Integrity. Next, in considering the firm's capability, competence, and time to undertake the resources, following matters have to be taken into consideration. The firm personnel have the knowledge of the relevant industry or the subject matter. So, for example, if we are appointed as an auditor of an airline industry, then we are appointed as an auditor of, if we have no knowledge about the airline industry, what are the rules and regulations, what are the norms and everything, will we able to comply with the ethical, will be able to perform this particular engagement? So we need to understand whether we have knowledge of the relevant industry. Second, the firm person having experience with the relevant regulatory and reporting requirement. For example, if we are appointed to be an auditor of a banking order, we need to know the regulatory requirements. For example, what are the requirements of RBI? What are the requirements of, for example, Anti-Regulation Act? So, for example, we are supposed to submit SLR report. What is SLR? Statutory liquidity ratio. We are supposed to report on CRR. What is CRR? Cash reserve ratio. We need to give NFAR. What is NFAR? Long form audit report. If we do not have experience, we do not know the regulatory requirement. For example, CRR and SLR. Do you know what is CRR and SLR? What is CRR and SLR? Cash reserve ratio. And what is SLR? Statutory liquidity ratio. How do we report on the same? And when do we report on the same? किसी किया यहाँ से report. By what time is the bank supposed to maintain the CRR and the SLR ratios? For example, let us say bank has total deposits of, let us say, 100 crores. Let us say CRR, let us say it is 4%. It comes to how much? 4 crores. Let's go to calendar. For example, payment of March. So, for example, let us say now on 8th, or let us say on 1st of March, they have 100 crores ka demand and time deposits. What should be the CRR? 4 crores. By when do they need to maintain CRR? On 1st of March itself? By which date they need to maintain CRR? Will RBI give them any time or they need to maintain CRR on the same date itself? No. They are given 2 weeks time. By fortnightly Friday. By which Friday? Fortnightly Friday. So if you have 100 crore ka deposit on 1st of March, By 15th of March, you need to make sure you have reserve of 4 crore with you. RBI. So by every fortnightly Friday, you need to make sure your CRR and SLR is up to date. For example, on 8th of March, you had time and demand deposits of how much? 200 crores. So my CRR will go to how much? 8 crores. You need to make sure that this is maintained by 22nd of March. So this is the fortnightly. But now, however, for example, if you're not aware of this requirements, this regulatory requirement, are you competent to do an audit? No. So the firm personals have experience with the relevant regulatory and the reporting requirements. So, for example, if you are doing an audit of bank, you should know how to give LFAR, that is long form audit report. You need to know how to give a report for CRR. You need to know how to give a report for SLR. If you are not aware of this regulatory requirement, you are not competent. The firm has sufficient personnel with the necessary capabilities and the competence. Do we have the experts? Where are the experts available if needed? Next, individuals meeting the criteria eligibility requirement to perform the engagement quality control reviews are available where applicable. The firm will be able to complete the engagement within the reporting timeline. So what we are trying to say is, do we also have the time? Do we also have the adequate resources that we will be able to give the report on? So this whole point was talking about homework. Competence. If there is any conflict of interest between the firm and the client, it should be properly resolved before accepting the engagement. Where the firm obtains information that would have caused to decline an engagement, it had information obtained earlier, policies and procedures, and the continuance of the engagement and the client relationship include consideration. So, for example, had I earlier known this particular fact, I would have not accepted it. I would have not accepted the audit. Now, later on, I came to know that I know this particular fact, and because of this, I would have not accepted the audit earlier had I known this fact. What will I do? I will have to evaluate the professional and the legal responsibilities that apply to the circumstances, including whether there is a requirement of the firm to report to the person who made the appointment, and in some cases to the regulatory authority. So, do I need to go and report to the person who made my appointment? Do I need to go and report it to the regulatory authorities? Who are the regulatory authorities? For example, regulatory authorities can be central government, it can be ROC, it can be, for example, SEBI, it can be RBI. So do I need to report to the regulatory authorities? And possibility of withdrawing from the engagement or from both engagement and the client. So I need to evaluate whether I need to withdraw in case if there is still a threat to my interests. So this was talking about what? Competence and capability. So once again, for evaluating the integrity, what we are going to evaluate is nature of the client's operation and what are the business practices. What are the attitude of the principal owners towards the accounting standard and the control environment, internal control environment? Are they trying to keep the firm fees as low as possible? Whether there is going to be any limitation on scope? Whether are they involved in money laundering or other criminal activities? Reason for our appointment and non-reappointment of the previous firm. Our capabilities and competence, we need to see whether we have knowledge of the relevant industry, whether we have knowledge of the relevant regulatory reporting requirements, whether firm has sufficient personnel with the necessary capabilities, are the experts available, the individuals meet the criteria and eligibility to perform the engagement are available, whether we'll be able to meet the reporting deadlines. If there is a conflict of interest between the client and the firm, if we will try to resolve it before accepting. However, we come to know about this matter after accepting, we will have to consider the professional and the legal responsibility. Do I need to go and inform to the person or persons who made the appointment or to the regulatory authorities, or we will have to consider the possibility of what? Policies or procedures on withdrawal from the engagement or both for the engagement and the client relationship address the issues that consider the firm. Firstly, I will have to discuss with the management and those charged with governance that I'm considering to what withdraw. To discuss with the appropriate level of the client's management and those charged with governance regarding appropriate action that the firm might take based on the relevant facts and circumstances. If it determines it is appropriate to withdraw, we will again have to discuss with the management and those charged with governance its withdrawal from the engagement, both from the engagement and the client relationship. I will also have to give them the reasons why am I withdrawing. Consider whether it is professional, regulatory, or legal requirement for the firm to remain in place or the firm to report the withdrawal from the engagement or both the engagement and the client relationship together with the reasons of withdrawal to the regulatory authorities. So we have to check whether it is professional, legal, or regulatory requirement to remain in place. A lot of times there is a legal requirement that we cannot resign because we have already considered a few examples. Let us say in SEBI case, we have considered that we have done a review, we were not signed. So you will have to remain in place. So if there is such a legal requirement, then in that case, we will have to state the reasons to the regulatory authorities as well. Lastly, we will have to document the significant issues, consultation, and the conclusion and the basis for which for the conclusions. So this was policies in case there were two. So we have covered how many points so far here? 3 points. Firstly, we discussed about leadership. For leadership, we will make sure commercial considerations do not evaluate the quality. We will have performance evaluation, compensation, promotion. Next, resources to develop the resources to develop and documentation. For ethical requirement, we should have policies and procedure that will comply with the ethical requirement for the code of ethics issued by ICI. What are the ethical requirements? Integrity, objectivity, professional competence, confidentiality, and professional behavior. What are the fundamental principles that should be emphasized? Actions of the leadership, spreading awareness and training, monitoring, and a control for dealing with the non-compliance. Observation of independence in all engagement is a founding. But however, when we are not expressing an opinion, independence is not a requirement. Now, for independence, what are the policies we should have? Communicate independence to all the personnel. We need to identify circumstances and a relationship that create what threats to independence. We will have to try to eliminate those threats or reduce them to an acceptable level. However, it is not possible, we'll have to withdraw. All breaches should be promptly notified for appropriate action. At least annually, that is at least once a year, we need to obtain a written compliance that all the personnel are required to be independent. SQC1 places emphasis on what? Familiarity threat. In case of same senior personnel, in case if there is a long association, then what we need to consider is whether there is any public interest involved and what is the length of the service of the senior person. For acceptance, what we need to consider is competence, compliance with the ethical requirement, and integrity. For integrity of the principal owners, we will see what is the client's operation and what are their business practices. What is the attitude of the principal owner towards the accounting standard and the internal control environment? Are they trying to keep our fees as low as possible? Whether there is a limitation on the scope, whether there are any money laundering or other criminal activities, the reasons for the proposed appointment of the firm and non-reappointment of the previous one. And lastly, next for capabilities and competence, we need to see whether we have knowledge of that relevant industry, relevant regulatory and the reporting requirement, whether we have the necessary capabilities and competence, are the experts that we need are available, whether individuals meet the criteria, will be able to meet the reporting deadlines. If there is a conflict between the firm and the client, they should resolve it before acceptance. However, we come to know after acceptance, had we known before acceptance, we would have not accepted. Then in that case, we need to consider the professional and the legal responsibility. Do we need to inform to the person or persons who made the appointment or to the regulatory authorities and consider the possibility of what? Withdrawal. Now, for withdrawal, we will have to discuss with who? Management and those shared with governance. If we are going to withdraw, we will have to discuss the reasons for the withdrawal. We need to consider whether there is any professional, regulatory, or legal requirement for the firm to remain in place or to report withdrawal for the engagement. So, for example, if you recollect your Companies Act, whenever we withdraw, we need to file ABT 3. And we need to file what? ABT 3. We need to give it to the company. We need to give it to ROC. We need to give it to tag in case of government company in 30 days of the resignation. Okay, so this is nothing but a regulatory requirement and document the significant issues, consultation and conclusion based for that. Okay, so how many points we have covered so far? 5 minutes का छोटा सा break है. And the unfortunate part is, though I showed you the question bank is very exhaustive. 70% questions are RTP questions. Only 30% questions are examination. So exam point of view, weightage is comparatively less, but since RTP they have asked so many times, we cannot take it for granted. So okay, 3 points we have covered so far. Next is human resources. Now human resources again focusing on what? Engagement team. The firm should assign the responsibility for each engagement to whom? So for everything, who is going to be responsible? Engagement partner. The firm should establish policies and procedures that identify and role of the engagement partner are communicated to the key members and the client's management and those shared with governance. So management and those shared with governance are aware what is the role and responsibility of our engagement partner. The engagement partner has appropriate capabilities, competence, and authority and time to perform the role. So forget about the capabilities and competency, but he should have the adequate time to perform this particular role. And lastly, engagement partner has clearly defined and communicated that to the partner. Now, each engagement should be able to carry out, engagement team should be able to carry out its responsibility with the necessary competence and skill. Therefore, firm should ensure suitable people are available and also groom them for growth. How will they groom them for their role? By training. The firm should assess the performance of their partners and team members, keeping in mind their commitment towards quality. So this was human resource. So who is going to be responsible? Engagement partner. We will identify and the role of the engagement partner. Communicate with whom to management and those shared with governance. That is the role of the engagement partner. We need to evaluate the engagement partner is completed and has the necessary capabilities, authority, also the time to perform this particular role. The responsibility of the engagement partner are clearly defined and also communicated with that particular partner. We will have to make sure that we have suitable people available and we will also groom them for that. Next is engagement performance. For engagement performance, again, what we need to do is DRSC. What is DRSC? Direction, review, supervision, and the consistency in a quality of the engagement performance is achieved through briefing of the engagement team of their objective, processes for complying with the engagement standard, processes of engagement supervision. So this is processes for the engagement standard. This has processes for supervision and training and methods of performance of their work. So we will have to brief our team towards what? Firstly, what are their objectives? One. Second, process for complying with the engagement standard. Third, process for engagement of the supervision and training. Fourth, methods of reviewing the performance, appropriate documentation of the work. So 5 things we are briefing them about. What are the 5 things? Objectives, process for complying with the engagement standards, supervision and training, methods of reviewing the performance of the work, and appropriate documentation. Whenever we have difficult matters or contentious matters where there are difference of opinion, we are not sure, we will have to take outside consultation from the experts. So consultation should take place in difficult or contentious matters. Consultation includes discussion at the appropriate professional level within or outside the firm. So for example, a lot of times an organization also have experts on board. For example, if you need an actuary, a lot of time your organization may already have an actuary. If you need, for example, tax consultant, they may already have a tax consultant. If you need a lawyer with who knows about environmental liabilities, they might already have a lawyer. So the consultation need not always be outside of the organization. It can be within also. So at appropriate professional level, within or outside the firm, who has specialized expertise to resolve the difficult or contentious matters. It helps to promote the quality and improve the application of professional judgment. Consultation procedures require consultation with those having appropriate knowledge, seniority, and experience within or outside on significant technical, ethical, and other matters. So here what they're trying to say is whenever matters are difficult or contentious, we will take consultation. It can be within or outside the firm. This is just to make sure the quality improves. Engagement quality control review. We already covered this point when we were doing SA 220. There should be an engagement quality control reviewer who will appoint the reviewer, the engagement partner. So significant judgments made in the engagement should be reviewed by the engagement quality control reviewer for taking an objective view. For taking an before the report is issued. What do you mean the objective view? Unbiased. So whatever significant judgments are there, what are the significant judgments made? Evaluation of management judgment. Next, ROMMS. So these are the few significant judgments which are auditor makes. Next, the extent of review depends on the complexity of the engagement and the risk that the report might not be appropriate in the circumstances. So how much to review depends upon the complexity of the matter. However, the review does not reduce the responsibility of the engagement partner. Still, who is going to be responsible? The engagement partner. For now, engagement quality control review is mandatory for all audit of financial statement of which entities? Listed entities. In respect of other engagement, the firm should devise criteria to determine cases requiring performance. So they will have to devise a criteria. They can voluntarily decide for which cases we need a. The engagement quality control reviewer for the financial statement of listed entities includes the following. So let us once again go to 220. So here the engagement quality control reviewer, what did he see? Discussions on the significant matters. So there were 7 things. Discussion on what? Significant matters. Second, review of the financial statement and the proposed auditor's report. Third was the selected documentation. Evaluation of the conclusions and whether the proposed auditor's report is appropriate. Next, what did we evaluate was the firm's independence. Next, consultations taken on difference of opinion or contentious matters. Document of the review reflects the work profile. So how many matters did we review? 7. Now coming back here, similar review will make the engagement quality control reviewer of the engagement quality control review for the audit of financial statements of listed entity includes consideration of the following. Firstly, the engagement team's evaluation of the firm's independence. Did we cover the same point in SA 220 as well? So we'll have to evaluate the firm's independence. Significant risk identified during the engagement and the responses to those risks. So significant risk can be considered as the significant matters that we identify. So what are the significant risks? How are we going to respond to those risks? The judgments are made particularly in respect to the materiality and the significant risk. So again, what is significant risk here is ROMMS. So what are the judgments made by the auditor? Whether we have taken appropriate consultations on the matters where there are difference of opinion or the matters were contentious. Significance of the disposition of the corrected and uncorrected misstatements identified during the engagement. So now, whenever we identify the misstatement, we'll discuss this when we go to SA 450. We will evaluate the identified mistake. So firstly, we will collect all the misstatements. Out of this misstatements, we will eliminate which are clearly trivial, which are clearly. What do you mean by clearly trivial? Which are insignificant. Which are what? Insignificant. We will avoid those. Out of the other misstatements that we have identified, we will divide them into two. One is corrected and another is uncorrected. For uncorrected, we will see whether they are individual or in aggregate material. If for material, we will have to modify the opinion. Okay, so for though we will have to evaluate the misstatements, we will have to evaluate both corrected as well as uncorrected. Why? Because uncorrected will have an effect on our opinion, but in case if it is corrected, if it is what corrected, still it will help me identify the ROIs. That will help me identify what ROIs. So more and more misstatements that we have identified during the audit, we'll understand what is the risk of material misstatement. So the significance and the disposition of the corrected and the uncorrected misstatements identified during the matters to be communicated to management and those shared with governance. So which are the matters that we need to communicate with those shared with governance? We will have to review. Whether the working papers selected for review of the work performed in relation to the significant judgment and support the conclusions. So whether this support the conclusion, whether the work performed that we have performed, it provides the evidence to prove that the work was performed in accordance with the standard and the legal and regulatory requirement. And lastly, appropriateness of the report, that the report issued is what? Engagement quality control reviewer is a partner. There is a partner or other person in the firm who should be a member of this. So moral of the story we are saying he can be any person, but at least he should be a chartered accountant. He should be a what do you mean by member of the ICI? He should be what? A chartered accountant or suitably qualified external person or a team made up of such individuals. But however, they are of the opinion, whoever is doing the review, they should at least be what same. Because if they are reviewing a report, they should at least be aware of what they are supposed to do. So they should be what chartered accountants. In this regard, suitability of qualified external person refers to individual outside the firm with capabilities and competence to act as an engagement partner. To act as a tell me who can act as an engagement partner? Who is a CA himself? If he is not a CA himself, can he act as an engagement partner? No. So directly and indirectly, they are saying he can be an internal person, he can be an external person, but make sure that the reviewer himself should be a qualified chartered accountant. For example, a partner or an employee of another firm. In addition, the engagement quality control reviewer for an audit of financial statement of listed entity is an individual with sufficient experience appropriate experience and authority to act as an audit engagement partner of the audit of financial statement of listed entity. It is necessary to maintain objectivity of such reviewer. So what they are trying to say is, for example, let us say you have audited, for example, let us say TCS. Is TCS a listed entity? For example, you are reviewing, for example, you are what? You are appointing some external person. Yeah, you are appointing some external person. So someone from your firm is open, but let us say you are appointing an external person. He should be independent to review your work. Yeah, he should be in a position to be appointed as an engagement partner, as an auditor of TCS. For example, let us say I have appointed some external person. He is employee of TCS. When he is employee of what? TCS. When he review our work, objectivity will be compromised. Yeah, what will be compromised? Objectivity. So whoever is the external reviewer, he should have been eligible to be appointed as an auditor of that particular company. So what we are trying to say is he should be independent of the firm. He should be independent of the auditor. Only then he can do an objective review, or else he cannot do an objective review. Again, read this particular point. In addition, quality control reviewer for an audit of the financial statement of a listed entity, who is individual with sufficient and appropriate experience, and to act as an audit engagement partner on audit of the financial statement of. So he can also be appointed as an auditor of those listed entities. It is necessary to maintain objectivity of such. Therefore, participation and engagement or decision making of the engagement team is to be avoided. So his participation should be avoided. If he himself is participating with the engagement team, will he be objective enough? No, he himself was a part of the engagement team. He himself is the reviewer. So for example, let us say in this engagement team, these are the five people who are performing the audit. Can one of them only review? No. Why? Because they have themselves have been part of the engagement performance. Where nature and extent of consultations become significant. Care is to be taken that the engagement team and the reviewer maintain the reviewer's objectivity. So we make sure the engagement team as well as reviewer, both of them maintain what objectivity. Where it is not possible, another individual within the firm or suitably qualified external person is appointed to take a role of either engagement quality control reviewer or person to be consulted on the engagement. So for example, let us say we have a team of five people only. I do not have anyone else. These five people who are already involved in the audit of PCS. Can either of them be a reviewer? No, because it will compromise the objectivity. Then in that case, I will appoint a suitable external person whose objectivity will be important. So indirectly, what they are trying to say is you have two options. One, you can have any internal person, provided he was not part of it. So for example, in our team, we have this five people, we have this five. If this five people were the part of the engagement team, I can ask anyone else who can be a reviewer, provided they should also be qualified chartered accountant, they can review the work. But however, if all the 10 people will anyone acquainted with the engagement, then in that case, I will have to get a suitably qualified person to do so. Whether you or else objectivity will be compromised. The firm should provide a replacement of the engagement quality control reviewer where the ability to perform an objective review may be. So I'll have to give an alternative that since his objectivity is compromised, we can replace this reviewer by some another. Okay, so this whole topic was focusing on what? Engagement quality control. So once again, what we will review, the significant judgments made. Just how much reviews to be done will depend upon the complexity. Even if the review is made, the responsibility of the engagement partner is not reduced. It is for now mandatory for all audits of the financial statement of listed entity. However, if they can devise any other criteria for whom this review is required, we can also do it. The reviewer will evaluate the firm's independence, significant risks that were identified during the engagement, the significant judgments, for example, what is materiality, what is the risk, whether appropriate consultations are taken place. He will evaluate the corrected as well as uncorrected misstatements identified. He will evaluate the matters communicated to management and those charged with governance. He can review the working papers, reflect the work performed and the evidence obtained in the conclusion reached. He will evaluate whether the appropriateness of the report that is issued. Who can be a reviewer? He can be a partner. He can be any other person in the firm or suitably qualified person or a team member of such individuals. In this regard, the suitably qualified external person or individual with the capabilities and competence to act as an engagement partner. Okay, so basically, he should also be a chartered accountant. In addition, the engagement quality control reviewer for an audit of financial statement of listed entity is an individual with sufficient and appropriate experience and authority to act as an audit partner of the audit of financial statement of listed entity. So he should also be eligible to be appointed as an auditor of what listed entity. It is necessary to maintain what objectivity of such entity. Therefore, participation in engagement or making decision for the engagement team is to be avoided all costs. So we should not be part of the engagement team. Wherever necessary, we will take the consultation and we will maintain the reviewer's objectivity. Whether it is possible, not another individual wrote a form, we will ask the suitably qualified external person to take the appointment. The firm's policies procedure should provide a replacement if we think so the objectivity of the reviewer is. So this whole point was about review. Now, for difference of opinion, we have already discussed if there is a difference of opinion between the reviewer as well as the engagement partner, we should resolve the same with the help of firm's quality control policies. So there might be a difference of opinion between the team with those consulted between the engagement partner and the engagement quality control review. The reports should be issued only after the issue has been resolved. So unless the issue is not resolved, can we give our opinion? No. See, it is very, for example, if the issue is not resolved, will the EQCR will give his report? No. And we have already studied until the EQCR does not give his report, we cannot make another. So it has to be resolved. In case a recommendation of the engagement quality control review are not accepted by the engagement partner and the matter is not resolved. So reviewer gives some recommendation, engagement partner have not accepted the recommendation and the issue between the same is not resolved to the reviewer's satisfaction. Matter should be resolved following the established procedure of a firm like consulting with another or a firm or a professional or a regulatory body. So here in this case, they should establish a procedure that in case if there is a difference of opinion, what will be? What is the easiest option? For example, if there is a difference of opinion between my engagement partner and a regulator. I know another practitioner, let us say who's an associate or who's in one firm. Now I will get them and then I will ask them that you resolve this particular issue. So we can have in the firm's policy. In case if there is a difference of opinion, this is the third person that we will go to and try to resolve this matters. Okay, so this was engagement quality control review, and in case if there is a difference of opinion. Now, engagement documentation. The few markers of engagement documentation they have covered also along with SA 230. So they have asked question based on this in SA 230 and not in SQC 1. But all these matters are written there in SQC 1. So this is important from exam point of view. The firm should establish policies and procedures for the engagement team to complete the assembly of the final files on a timely basis after the engagement report has been filed. How many days are we given? 60 days. 60 days from the auditor's report in case of engagement and in other cases within the limits appropriate to the act. So for audit, how many days are we given? 60. 60 days from the audit report. So within 60 days, we need to assemble. So what do you mean by assemble? My audit documentation will be started. For example, if, let us say, if there is an organization who are present at multiple locations across India. For example, JKSC has 94 centers across India, spread across 33 cities. So there is a possibility that we may have one joint auditor, let us say, for example, let us say in Ahmedabad, or let us say not joint auditors, one of my team engagement team is working in Ahmedabad, one of my engagement team is working in Bangalore. So the working papers of Bangalore might be with the Bangalore of Ahmedabad, maybe with Ahmedabad. Now we will try to assemble this working papers. Can we try to assemble this working paper in one single file? So how much time are we given? 60 days. 60 days after the auditor's report. So you give the audit report, you can do this assembly once the audit report has already been given. The engagement file should be completed in not more than 60 days after the date of auditor's report in case of audit engagement and in other cases within the limits appropriate to the engagement. Now, where two or more different reports are issued on the same matter, information of the entity, the firm's policies and procedures relating to the time limit of assembly file should be considered for each report if it was a separate engagement. For example, let us say there is Deutsche Bank. Deutsche Bank has made a financial statement 1 as per Ind AS. Okay, let us say because they have their subsidiary in India, they have also made a financial statement 2, which is as per German law. Since there are two financial statements, there are two audit report. Audit report 1, there is audit report 2. Audit report 1, let us say, was given on 20th of August. Audit report 2 was given, let us say, on 29th of August. So for audit report 1, our documentation will have to be assembled within how many days? 60 days. But for that, we will consider 60 days from 20th of August. Here we will consider from 29th of August. You will consider that as if these are two different engagements and accordingly prepare documentation for two different engagements. So once again, let us read this point where there are two or more different reports. So there is one report or two different reports. Two different reports. issued in respect of the same subject matter information of the entity. The firm's policies and procedure relating to the time limit of assembly should be considered for each report as a separate. So not considered as one engagement, we will consider this as one engagement. This is our example. The next teacher example will be a website with little financial income. मतलब वो गया कि होने वाला है सब तब तो नथिंग का टाइम हो गया तो फॉर्म्स में ये वाला स्टार्टिंग सस्टेनेबल डेवलपमेंट ग्रुप का ट्रेनिंग्स इंडस्ट्रियल ट्रेनिंग का फॉर्म है सभी को आपको ये बात तो इसके दिमाग में जाने हुआ उसको इंडस्ट्रियल ट्रेनिंग में अलाउ कर सकते हैं अच्छा इंडस्ट्रियल ट्रेनिंग में जा सकता है वो नहीं करते हैं कोई कंसल्टेंसी में मिला ठीक है चलो. So next example, they have written the same example. This may be example in case when the firm issues a audit report on components financial statement for group consolidation. See, why did we make this German gap? For group consolidation purposes. At a subsequent date, auditors report on the same financial information for the statutory purpose. So for a component, we have made as per the group consolidation. So there are two financial statements, hence two audit reports. Now, policies and procedures should be designed to maintain confidentiality, safe custody, integrity, accessibility, and retrievability of the engagement document. So now, how do we maintain the confidentiality, safe custody, integrity? What do you mean by integrity? No loss of data. The integrity, your integrity will not mean honesty. Integrity means no loss of data. Accessibility, how do we retrieve this particular documentation? Care should be taken that policies and procedures of documentation of the quality control review require documentation that policies and procedures require the firm's engagement quality control review have been performed. So what will be document? Engagement quality control review have been performed. Second, the engagement quality control review has been completed before the report is issued. Reviewer is not aware of any written result. So three things will be done. Firstly, engagement quality control review has been performed. It has been completed before the issue of report, and there are no unresolved matters. Unless otherwise specified in our regulation, engagement documentation is property of the firm. So in extremely rare circumstances, whenever fraud is involved, for example, let us say when central government is involved, that point of time they may ask us for the audit documentation, or else audit documentation is property of the auditor. Will we give this to anyone? So the firm may at discretion make portions of extracts from the audit documentation available to the client, provided such a disclosure does not undermine the validity of the work performed. So let us take example. I had a few documents of the client. For example, let us say we were auditing Apple. Apple, for example, when they had the center in Mumbai, they had a rent agreement with the company. Then whatever is a sales, we will pay you, for example, 1% for cost process. So we were not really confident about this rent agreement. So we asked for a rent agreement for copy. We wanted the external confirmation for money. So usually the rent agreements that we see are usually flat. Take for example, let us say 1 lakh rupees a month, and there is a escalation clause. But here they said it is going to be based on the gross receipts. So we obtained the rent agreement from, for example, let us say Apple, and also a confirmation from the third party that this are the terms of agreement. This is the documentation, this is the evidence that we have obtained. Now, one fine day, for example, there is some survey going on, some BMC official and XYZ people are coming. Now, the manager of that particular center asked me to give the rent agreement copy that I have. They said the BMC officials are asking for it. And our main manager, our India level head, who has this particular agreement or copy, is not reachable. For example, he is traveling to California, is the flight right now, we are not able to reach out to him. And this BMC official unnecessarily is causing a lot of problem. He just wants to see the rent agreement or copy for what purpose we don't know, but he wants. He said, you already have this rent agreement copy with you. Can you please provide the same? I thought if I provide the same, it will not impact my costs. This was the rent agreement copy provided by them. I have just taken a copy of the same and added to my documentation. Even if I give them the copy of this, it is not going to affect my work. It is not going to undermine the validity of the work that I perform. I gave the same to them. Second example. For example, audit program that we make. Is everyone aware of the audit program? Take the audit program, the strategy that we have made is also a documentation. That is also, that is who's going to perform the work, what is the procedure that we are going to apply. For example, if there is sampling, what is the sampling method, what is the tolerable level that we can accept. We have developed the audit program. Now client is asking, now the same Apple manager is asking, can you please give me your audit program? We'll come to know what are the things that you are going to check. We'll keep those files ready for you. So when you come on Monday, you do not have to waste your time. Everything will be ready for you. So you can finish your job on a quick basis. You are also happy. We are also happy that we get the report on timely basis. Now will I give my audit program to you? No, it will undermine the validity of the work performed. We will exactly know what are the procedures I want to perform. For example, if I'm going to apply monetary unit sampling, I'm going to check the transaction over and above 1 lakh only. He will make sure if he wants to commit fraud, he will commit fraud for transaction below rupees 1 lakh. Now he exactly knows what is going to be my nature, timing, and extent of audit procedure. It is very easy for him to commit a fraud. Can I give this audit program to him? No, because this will undermine the validity of the work performed. It will impact the work that I perform. Hence, if the client will ask for the documentation, it is upon my discretion whether I can give this documentation or whether I cannot give this documentation. Okay? So if client asks, see this working paper is a document of the auditor. Will I give it to someone else? No. I am not going to give it to the third party. Can I give this documentation to the third party? No. But can I give it to the client? It depends on my discretion. That depends on my. So here, what they will do is, here, they will confuse you. What they will do is, they say, for example, let us say a bank manager ask for your working papers. He said he wants to sanction a loan. Since the audit report is not yet available, please give your working papers on the basis of which the bank manager can provide you the loan. The client also supported client said, you please give the working paper so the bank manager can give us the loan, sanctions the loan. Can the auditor do so? Auditor is of the opinion it is upon his discretion whether to give this working paper or please comment. What will be our answer? Did everyone understand the question? Do you want to repeat the question? Repeat the question. Bank manager said we want to sanction a loan to your client. However, since the audit report is not available, we are not sure about their profitability. So for this quarter, you please give your working papers based on which we will sanction the loan. So it was requested by the bank. Client also supported yes, please give your working papers so that basis on this, the bank manager will sanction the loan to us. Auditor is of the view that it is upon the discretion of the auditor whether to give this working paper or not. Please comment. Whether the auditor is correct or whether the auditor is incorrect. Auditor is incorrect. Why? Because in this case, we are giving the working paper to the bank manager. We are not giving this working paper to the client. We are giving it to the bank manager, and giving it to the third party leads to breach of confidentiality, and to the third party we can never give access to our working paper. That is our property. We have discretion whether to give it to the client or not. But can I give it to the bank manager? No. So here they will confuse you just by giving the word that it is upon the discretion. No, to the third parties we can never give this working papers because your SQC one clearly says you can make it available only to the clients. So can I give this to the third parties? No, I cannot give this to the third parties. So now here also whether to give it to the client depends on my discretion. If I think so, it will undermine the validity. It is a different thing. And if client goes and give, that is not my duty. But I right now I give it to whom? Client. Did I give it to the third party? I have not breached the confidential. Now engagement documentation has to be retained for a period of time to permit those performing monitoring procedures to evaluate the firm's compliance system. So we have to maintain and keep the engagement document for a longer period if required by law. In a specific audit engagement, the retention period ordinarily is not shorter than how many years? 7 years. Okay, so we will keep the audit documentation for how many years? 7 years. 7 years we will consider from the date of auditor's report. Now let us say there was subsidiary ka audit report was given, for example, on 15th of July 24. Holding company ka audit report was given on 15th of August 2024. We will keep it for 7 days. But when we may count 7 days, 7 years, so we will keep it for 7 years. We will count the 7 years from which 15th July or 15th August, or we will consider two different days. For subsidiary, we will count 7 years from 15th July, and for holding, we will count from 15th August. So option 1, 15th July, option 2, 15th August, option 3, we will consider different 7 years, one for subsidiary from 15th and a second for holding from 15th August. We will consider 7 years from the group auditor's report. From the what is the logic here? For example, ever an inquiry comes into the group audit, the holding company's auditor's report, we may require a documentation for subsidiary as well. Hence, they said you will have to keep it for how many years? 7 years. When you consider the date of 7 years from the holding company's auditor's. So how many years they are giving here? 7 years. A lot of times students end up making mistakes here. When in MCQ, they are give you one option of 7 years, they give you one option of 8 years actually. Now in income tax act, you have to maintain your books of accounts for how many years? Hence you end up taking how many years? 8 years. Here you have to keep it for how many years? 7 years. 8 years is not applied. So this was about documentation. Expect questions based on documentation. A lot of times they ask MCQs. So the firm should establish what policies and procedures for the engagement team to complete the assembly, which should happen in how many days? 60 days, 60 days from the auditor's report. But if there are two reports, it should be considered as two different separate engagement, and we should consider 60 days for both of them. Next, there should be policies and procedures maintain the confidentiality, safe custody, integrity, accessibility, and retrievability of the engagement documentation. Next, the documentation was to be meant to consist the policies and procedures that the review was performed. Second, review was completed before the report was issued and reviewer is not aware of any unresolved. Unless specified by law and regulation, audit documentation is property of the auditor. We may at discretion make portions of or extracts of engagement documentation available to the client, provided such disclosure does not undermine the validity of the work performed. Please mark this important, this particular point. When we go to SA 230, the whole of SA 230 is filled only with this particular point. So if SA 230 is asked probably for, let us say, 5 times at finance level, since they don't ask much of 230 because it is considered at which level? Inter level. If 5 times SA 230 is asked, out of 5 times, 4 times this is the compliance. Okay, so it is at the discretion of the auditor whether to provide it to the client. We will never provide it to the third party. Next, we will keep this engagement documentation for how many years? 7 years. But 7 years is from the date of the group auditors. अगर रेड हुई क्लाइंट के यहाँ तो वो ऑफिसर तो देना मैंडेटरी है ऑडिट डॉक्यूमेंटेशन नो सी अगर रेड हुई तो हम ऑडिट डॉक्यूमेंटेशन वाई विल वी गिव ऑडिट डॉक्यूमेंटेशन नहीं ना तो जो भी सपोर्टिंग एविडेंस है जो सपोर्टिंग रिकॉर्ड्स है जिसके बेसिस के ऊपर वी आर प्रिपेयर द फाइनेंशियल स्टेटमेंट all those things we will give we are not it is not mandatory to give unless required by law and regulation it is not supposed to be so for raid and all we are not supposed to do next monitoring the firm should ensure policies and procedures relating to the systems of quality control are relevant, adequate, and operating effectively and compliant with practice. So such policies and procedures include ongoing consideration and evaluation of the firm's quality control, including periodic inspection of the selection of the completed. So there should be a periodic inspection of selection of completed engagement. So if we have completed right. So see, we will have to accept for what purpose are we doing. So a lot of times if you think so, this engagement and the audit documentation you are giving, client will misuse it, will not do it. Because so if we know, this is just a way by which they are taking from us and they will provide it to the third party. And if you think so, it can be misused. So in case of banks loan, we know it will be misused. Why? Because in case of working paper, we are not giving any opinion. But line manager will end up consuming this is what opinion on this quarter. So in that case, we request the management that no, we cannot do this. If you want, we can give you a review, take what are the review, and that report we can give it to the bank like this. So in that case, we will get it. Next, quality control engagement has to be monitored, taking account of the following. Deciding whether the quality control systems firm has been designed and effectively implemented. So when we are monitoring, what we want to see is whatever the quality systems has been appropriately designed and implemented effectively. Firstly, we are checking the design. So firstly, what we are checking is the design. If the design itself is faulty, then we will understand then we need to change the design, how are we going to apply this quality controls. But however, if the design is appropriate, we need to check whether this be effectively applied, effectively implemented. Examine whether new developments in the professional standard, legal and regulatory requirements have been reflected in the quality control policies. To give you an example, in reporting, there are few changes. For example, under Companies Act, suppose for example is a company which has a software which has a audit trail. There was no reporting as such. यहाँ पे एटलीस्ट कंपनीज का किसी ने ऑडिट किया है एनीवन हैज मेड अ रिपोर्ट फॉर कंपनी पब्लिक सब लोग टैक्स में ही है से किसी ने ऑडिट नहीं so for example before April 22 there was no reporting on this point but after April 22 they added a point where in case of a company is using a software which is a feature of audit trail we as auditor need to report whether this feature was enabled throughout the year there is no tampering with this particular audit trail and whether there was any misdoings or any wrongdoings with this particular audit trail. So this is a new requirement. So this is a new requirement. So in case if there is new development in the professional standard or the legal or regulatory requirement. So this example that I gave was a requirement of legal and regulatory requirement. This is an addition under 143 subsection 3 to report on what audit trail. So we need to make sure whether we are complying with that. If we are complying with that, it will reflect the quality control policies that whatever the amendments, whatever the updates, the firm is complying with the same. Conducting monitoring by entrusting responsibilities of monitoring process to a partner or other person with sufficient and appropriate experience and authority. So we will give this responsibility of person who has a sufficient and appropriate experience to make sure that we are complying. Dealing with complaints and allegation against the firm or any of its employees for non-compliance with the professional standard or the applicable legal and the regulatory requirement by a person or within. So in case if there is an allegation, we need to consider whether the allegations are true or not. Taking appropriate and remedial actions against the person who did not conform with the quality control policies. So we will have to take remedial action. ICI again said, you only take the remedial action. We are not going to interfere. In case if you come across a person of your engagement team who has not complied with the ethical requirements. Okay, for example, though he gave a declaration that he is independent, but is not independent. You take the remedial action. For example, let us say I appointed the whole engagement team. Now I know Krishna has shares of this particular entity that we are auditing. What are the remedial actions to them? Firstly, I'll ask Krishna, you please share the shares. One thing. Second, if Krishna does not agree, for example, he said, I received the shares of MRF by my grandfather, okay, grandfather received from his father. So this is something that my family is passing on and on. Okay, we cannot afford the shares, but just because our grandfathers, our ancestors bought it, we are having the shares. I will not sell the shares. I'm going to keep the shares. So I cannot ask him to sell it. Then in that case, what I will do is I will ask him not to be part of this engagement team. So I may have multiple orders going on. In case if you are auditing MRF, I will ask him that you please don't be part of this particular engagement team. You can be part of some other engagement. So these are the possible actions that I can take. In case I am auditor only of MRF. Okay, so in that case, what I can do is I can ask him to take a transfer from my firm to another firm because he cannot manage it. So remedial actions, ICI said, you yourself take, we are not going to interfere. It is your internal matter, you manage it. So taking appropriate actions against the personnel who did not conform with the quality control policies. Taking action when deficiencies in design or operation of the firm's quality control policies or non-compliance with the firm's quality controls are identified. So when will we take action? When the design and operation is not appropriate or whenever there is a non-compliance. So with this, finally, we are done with what? SQC. Okay, so this was what? Monitoring. Okay, so recheck-up wala part we have already completed. We have already completed what is SA 220. So question 9, let us just cover a couple of questions. The rest of the questions, I would want anyone to just briefly go through whole 220 and SQC. So when we discuss the question 9, at least we can relate with what we are trying to say. But the first question is, what is the difference between SQC 1 and SA 220? We have already written the main points. What is the main clear difference? SQC 1 is applicable to the whole firm, whereas 220 is only to my engagement. SQC deals with audit, review, assurance, and related service. However, SA 220 deals only and only with. So, entire firm, it applies to the entire firm and fixes responsibility of the firm to be assumed by the CEO to manage. However, this is applicable only to the engagement and the engagement partner takes the responsibility. This is not applicable to the entire firm. So, basically, what they are trying to say is, so it is applicable only to them who has taken up the audit assignment. Next, this is applicable only and only to audit, whereas this is applicable to audit, review, assurance, as well as limited results. Second, relates to quality controls system considering the policies and procedure for the firm as a whole. However, it is applicable only to the auditing. So this was again applicable to the whole firm, whereas this was applicable only and only to what audit engagement. It pertains to the system of quality control designed to provide firm with reasonable assurance that a firm and its personnel comply with professional, regulatory, and legal requirements so that reports issued by the firm or the engagement partners are appropriate. This is premised on the basis of SQC1. Therefore, SQC1 is sine qua non for applicability of SA 220. So both are what say. It is within overall quality, engagement teams implement quality control policy procedures applicable to the. So what they are trying to say is that both are they must same. Just because SQC1 is SA 220 is premised on the basis of SQC1. So this was the difference between what SA 220 and SQC1. The question try करो so you'll understand what are the types of question. MNP, a form of, is appointed by a bank to conduct So what we are doing is it deputes one of the parent chartered accountant employees, Sudhanshu, to conduct about stock audit. He leverages as an opportunity to prevail upon the client to get the accounts audited by their firm. Okay, so what he's trying to do is he was appointed to do stock audit. Now he's trying to leverage this, he's trying to prevail upon the client so that he can also get the opportunity to audit the accounts. He's appointed only for stock audit, but he was trying to get the assignment of audit. He assures the client of a clean stock audit report. Okay, he assures of what? Without adverse comments as a quid pro quo. So I'll give you a clean stock audit report. You appoint me as an auditor. Is the approach of Sudhanshu proper? How does it reflect upon the quality system of the firm? So we know okay, the approach of Sudhanshu is not appropriate. But now how will you write the answer in context of the quality? Approach of Sudhanshu is not proper. Such practices blatantly violate the code of ethics and spirit. So if you recollect, what were the five ethical principles? Integrity, objectivity, professional competence, confidentiality, and professional behavior. Here he has not followed integrity because he is giving a clean report, whereas everything is not true and fact. It reflects upon poorly quality systems of the firm envisaged by SQC1, which require the control and the procedures should be documented and communicated to the first person. It shows that the first personnel are not properly synthesized with the requirements of SQC. So they are not aware of what they're supposed to do. Hence, there is no firm quality controls. Question number 3. Mr. M is a prospective client in a social function. He assures to visit the office of M very soon in relation to professional work. During a discussion over a cup of coffee next week, it transpires that there was a search of enforcement directorate in the premise about a month back, resulting in a recovery of huge sum of cash. So there was a raid at the client's office by ED. ED deals with what? Money laundering. The income tax department also searched these premises in relation to bogus capital gains on the penny stocks. So there was a raid by ED. There was also a search by income tax department. Revealing the poor quality of services provided by his present auditor, he offers appointment as a tax auditor to his family-owned CA firms, CAM, in lieu of handsome fees. What are the factors to be evaluated? Try to answer without reading it. For example, let us say there is a client. For example, there's a raid by ED, there is a raid by income tax officer. You are going to excel that tax point. What is the first thing that will implement? Whenever you accept or whenever you continue, what are the factors that you consider? CSI, what was C? Is this matter affecting my competence? Assume your CAM, is it affecting your competence? Capability, ethical requirement, what is it affecting? Integrity of the principal owners. So this answer will focus on that. As per SCPC 1, before accepting new engagement, integrity of the client should be considered, including matters indicate involvement of money laundering or criminal activities. There has been a search of ED on the said party leading to recovery of huge amount of cash. The above couple of actions of the income tax department regarding the bogus capital gain and on penny stocks indicates that the client might be involved in money laundering activities. Therefore, offer should not be accepted because we have not the integrity of the principal. So what you will have to do is whatever you are studying, the main head points you will have to keep it your head, and you will have to try to code it. At CFINL level, they are not expecting you to write the whole of SQC1 executive this. They just want to test whether you can apply. So when you write the answer has to be 3 paragraphs. How many paragraphs? First paragraph will state what is written in SQC1 provisions. Out of 5 marks, 3 marks or 4 marks will be for this provision. Second paragraph has to be case specific what happened in this particular case. And third paragraph should be conclusion. If it is a 5-mark question, average length of your answer will be approximately 12 lines, 12 to 15 lines, that's it. You don't have to write whole page or maybe three-fourths of a page. Around 12 to 15 lines will suffice if you have written relevant points. But do you need to mention SQC1? Yes. Do you need to mention the name of what is the standard? Yes. So first write the provision, then write case specific, and then write the conclusion. So this is how you have to write. So hints that I have given are only crux. I have not reprinted the whole answer, or else the book will become even more very useless. So here you will have to write in this particular way. Question number 4. Beta Limited approached a firm of chartered accountants to assist them in the preparation of financial statement and issue compilation report. In this regard, does the firm have a responsibility in relation to the quality control for the above said engagement? Now, compilation report is nothing but a related service. That is nothing but a. So what do you mean by compilation? For example, let us say McDonald's is coming and asking you that we have our centers across India. Every center has prepared their own financial statement. Now we want to compile all the financial statement. You are just helping them to compile the financial statement as per the AFR. You are assisting management for preparation of financial statement. Are you giving any opinion on this? No. You are assisting the management. You are helping the management. This time you are part of management. Will quality control be applicable to this particular engagement? Yes, we already studied that audit is applicable to what? Sorry, what SEC is applicable to what? Audit, review, assurance, as well as risk. This particular point is covered in detail now in our syllabus, but we already have what? Related service. We have SRS. So when we go to SRS, in SRS, they have in detail explained this that yes, we need to comply with the quality control. We need to comply with what? SQC. Because here they are talking about compilation report. Compilation report is what? Related service. This is non-assurance engagement. We are not giving any opinion. So from accounts compile करते हैं तो पता चला कि ये क्या हो गया related service and to ease you अगर समझो मैं तुम्हें लेके जाऊँ related services में तो SRS 4410 डील किसके साथ करता है compilation तो अभी तुमसे तुम्हारा नहीं हुआ तो मैं थोड़ा भी डाउट हो but that also you should not have because if you recover तो हमने basic concept पढ़ा है in basic concept I already taught what is assurance what is non-assurance and in non-assurance I have specifically given you this example that we are compiling the financial statement we are preparing the income tax return we are filing the GST return all these are non-assurance. Last question for the day. GVL and Associate are auditors of a listed company involved in the engagement team is stuck up in some issues pertaining to the IND AS applicable to the government. They have framed a query and sent to ICAI for expert opinion on the matter. The issue was resolved upon receipt of the expert opinion. Since the expert opinion was provided by ICAI, engagement team was of the view that the engagement quality control reviewer has lost its relevance. What the reviewer is trying to say is that he has lost its relevance because they did not listen to the reviewer, they went to ICAI. Once again, in case of listed entities, the engagement team is struck with some issue pertaining to particular intakes. What is this matter? Difficult or contentious matter. So they are not sure whether index is applicable. They have framed a query and said to for expert opinion because who was making index? Yeah, because they directly asked ICA what is supposed to be done. Okay, now expert opinion is now the engagement quality control review is of the opinion that his relevance is lost. No, we still has to perform the engagement quality control review because this is a listed entity. And for every listed entity, engagement quality control review is relevant. Whenever there is a difference of opinion, whenever there is a contentious matter, we are going to take consultation from the outsiders. So here his relevance is not evidence. The engagement quality control review in listed entities updating expert of opinion of ICI pertains to a issue of interpretation. the appointment of reviewer is a separate and mandatory requirement in the audit of administrative fees. Okay, so this is mandatory, so his relevance is not at all obvious. Okay. RSP, a firm of chartered accountants or auditor of listed company, engaged in a manufacturing of heavy machineries. The audit report for the year 23-24 also included a report on matters listed in CAR. While reporting under clause 7, what does 7 deal with? Statutory rules. What is 7? Statutory rules. 7 deals, clause 7 deals with statutory rules. 7A says if the statutory rules are undisputed. For example, I am supposed to pay income tax. Income tax department is also view that workshop you need to pay a tax of 5 lakhs. I also agree that I need to pay tax of how much? 5 lakhs. But I have not paid. This is undisputed. Then this is what? Undisputed. Income tax authority said 5 lakhs. I also paid. But however, I am not paid the amount. In this particular case, we need to report under clause 7A if the amount is outstanding for more than 6 months. If it is more than how many months? 6 months. On the first day itself, we are not supposed to report. 7B, it deals with when the matter is disputed. When the matter is disputed, income tax authority said you are supposed to pay a tax of 5 years. They said I am supposed to pay a tax of 3 years. I will have to, here I will not wait for 6 months. I will have to report it immediately. I will report 2 things. What is the amount of dispute? The amount of dispute is 2 lakhs, but I also only have to pay 3 lakhs. I will also report with which authority do I have a dispute? I have this dispute with the income tax. Okay, so this was clause 7. Coming back to this, while reporting under clause 7 of the said order relating to the regularity of undisputed statutory dues by the company, the auditors have commented that company is generally regular in depositing the statutory dues to the appropriate body. Is the above reporting quantitative and in line with the requirements of SA 220? No, because it just explained you when we are reporting for undisputed, we need to report if it is outstanding for more than 6 months. We cannot give such remarks that they are generally regular. Whether they are paid within six, and if it is outstanding for 6 months, you report. If it is not outstanding for 6 months, you don't report. You cannot say generally. You cannot give such qualitative remarks. Yeah, ऐसे तो client अच्छा ही है. It is, you have to give very specific remarks. Because यहाँ पे such reporting is not qualitative. It is not in accordance with 220. One of the objectives of the auditor in 220 is to implement quality control policies at the engagement level that provide auditor with reasonable assurance that the audit complies with the professional standard and legal and regulatory requirement. Reporting under CARO is not proper, hence the auditor does not comply with the legal and the regulatory requirements. Okay. So now specifically they asked the above reporting qualitative requirement in line with the requirement of 220. They could have asked this what? SQC also, but since they asked specifically in context of what? 220, we answer in context of what? So this is question number 6. Record कर लेते हैं. PQR, a statutory auditors of a listed company. There arose an issue during the course of audit relating to related party transaction. Engagement partner was to consult engagement quality control review on this matter during the course of audit process itself. Can we consult the engagement quality control reviewer discuss? So he has a problem with engagement related. He wants to take an opinion of the reviewer during the course of audit. Why? Exactly, if the reviewer is participating, his objectivity will be compromised. So we can take outside consultation or someone else, but we cannot take a consultation of the reviewer because the reviewer is only helping me. He is only saying notes. And later on his reviewing, he will say everything is correct because he cannot identify misstatement in the work that he has only performed. So it is necessary to maintain objectivity of the reviewer. Therefore, participation in the engagement or making discussion or the engagement is to be avoided at all costs. However, engagement partner may consult EQC reviewer during the engagement so as not to compromise its objectivity and eligibility to perform the Okay, so if it does not compromise the objective, you do it, others will. Okay, so with this, we will put an end to this particular session. Next lecture is a support once, go to SQC one. Okay, and next lecture will not be as high as today. We will go ahead with what? Reporting, that is chapter number 7.